Welcome everyone. Thank you for joining us today at Admiral Markets. My name is Chris. I welcome you to the strategy webinar on the 1st of October, new trading month, in fact, a new quarter. So let's see how the results will be. I hope you had a good third quarter. There was definitely some good action, I guess, relatively speaking, for considering the fact that there was many months of summer included. And I think that had to do greatly because of the dollar nicely moving, dollar nicely giving some good trends. The euro-dollar trend, for instance, starting way back already, but definitely in July it accelerated even more so, just like on the pound and dollar-yen, and those had good trends in July and August. And Aussie starting just last month in September with its big fall. So relatively speaking, for considering the fact that some are good trends, and all due to the dollar. And before we start this disclaimer though, online material developed here for a global audience. Please take into account that the information in this session may not be suitable for everyone. To get the corresponding info and to find out if it is suitable for you and charting conditions and other details, take a look at admiralmarketsglobal.com. Also, trading for exchange and global financial markets is considered high risk and it may not be suitable for all investors. Please take the advice of an independent financial advisor for more information on that. This webinar is not advice, and the webinar is for informational and educational purposes only. You can always ask for the disclaimer through the admiralmarketsglobal.com website to get the appropriate contacts. And by continuing watching this webinar, you agree with the disclaimer mentioned here. So we're taking a look at strategy focusing on various aspects, particularly more of rule-based than discretionary technical. And we'll take a look at those rules of primarily the moving average, but also at the Camarilla levels. Let's see how far we get with looking at these four strategies. Alrighty, let's take a look now at the calendar. Good morning, Joseph. Good morning, Mike. Good to see you both. I hope indeed we have a good month ahead. September was a good one, so I hope this month will continue with the same fashion. Let's see. We got some Aussie retail sales that definitely, if you have looked at the markets already, that you probably noticed the big Aussie weakness spike against the dollar, against the euro, against the pound. Retail sales way lower, well, at least decently lower. We have some euro news coming up, German PMI, pound PMI, the most important, but we have all kind of PMIs coming up, Spanish, Italian, French, Greek, and later today the ADP, which is always a big number to keep an eye on, and the US PMI, by the way. Hang on, I have the chart on one of the other screens, so let me try to scoot that over so you can see it as well. There we go. So yesterday was a good day. I had mostly winners, one loss on the pound New Zealand, but otherwise the dollar definitely rocked. As I was saying yesterday, dollar strength looks like a good trade yesterday, and that proved to be true against the CAD, against the Swiss, against the yen, against the euro, even against the pound. You name it, it worked out. The Kiwi, some were better than others, but across the board there was dollar strength. So those trades worked out well. We can take a look at the exact details of each trade later on. I do want to just go through it quickly with you to every time to learn from the decisions, or like the analysis. No, yeah, analysis is a better word. Analysis yesterday, and then to see how it panned out. But let's first focus on what's going to happen today, or might happen today, with regard to the moving averages and Camarilla. Let's say first, let's focus on that one. We are definitely still continuing with this euro-dollar downtrend. hitting now and venturing into the 125 zone. Quite impressive to be in these numbers, considering the fact that the euro dollar was knocking on the door, maybe is a better word, knocking on the door of the 140 level, right? So that was a while back, I know, but it's funny to see it reverse so quickly, and that we could see a continuation again today. It could be a break, pullback, continue. We've seen it. Oh, I don't have my drawing tool. 1 second. Sorry about that. We could see it continue today again because we, as I said, could be a pullback for more downside. We've seen that more often here. Break, pullback, go. That wouldn't surprise me. We had a very strong fall yesterday. Is it possible that this is the start of a big reversal up to 130? You never know. You really, really never know in trading, but it doesn't seem very likely if I look at the momentum here provided by the awesome oscillator, for instance. It looks very strong, and if I look at the hourly, yeah, it's a decent strength compared to the last bump here, and even the last one before that one. So I wouldn't necessarily expect this downtrend to suddenly be over. Looking at this hourly chart, you can see a good follow through. We've fallen a lot in one shot on this hourly. What I mean with one shot is the fact that the price stayed below the 89 ever since this point, which is already a decent run considering the fact that we've fallen 400 pips. The 4-hour chart, we've kept on falling and stayed below the 89. Oof, we cannot even put it on the chart all the way from here. Doesn't even fit on the chart. From 136 to 1100 pips. Will there be a retracement at one point? Obviously, it has to. I mean, it's falling so far, so long for so much. At one point, it will have to. But the question is, will that be today? Doesn't seem so likely, actually. So from the strategy point of view, I would say a break below this fractal right in here, this support level, it's relative. It's unfortunately just a bit off of the L3. I like to have the fractal right at the L3, but a short below that fractal or a short below 136 right at the L3 pending, I think makes sense in my humble opinion. It is showing bearishness, and break below support would be the moment where we could expect that fall, just basically like what we saw yesterday. I wouldn't expect such a strong move down like yesterday because this is the continuation, and normally speaking, when you start to break here, you will see price having a bit less impulse, I would expect, than this break. And we would probably have some divergence between these bottoms. So what will happen probably is when you break the bottom, you'll see it move an inch down a bit, and then I would expect bounce off a target for more correction. So maybe 127, 125.36 here, for instance. With 125 probably maybe as a further bearish extension. And that would probably be it. Let's take a look at how many pips it fell here yesterday, from 127.10ish to 125.70ish, which is about 135 pips. So if we take 135 as the very max we would expect from this top down to 135, which is, yes, it's about 125. Let's see, Bjorn, if you look at daily fractals, let's take a look. Let's take a look at the daily chart. Oh, 1 second, let me get rid of this fib here. It's blocking the view. I'll forget it, I'll just put a new template. Okay, so if you look at the daily fractals, it never broke, it never breaks one, so why not sell at the next can be 1,000 pips still to go down. I'm not sure if I follow, but indeed, one thing I do understand and agree is the fact that indeed what a downtrend it is. I definitely agree. It's an amazing downtrend. The fractals, all lower lows and lower highs, and really what an acceleration it has been. I mean, if you look at the distance between 21 and 89, it's ever more growing. If you look at how far price is away from the 21, it's ever further away. It's a massive momentum fall. And due to that aspect, the downtrend is no way anywhere close to being over. And the dollar trend should continue in Q4 as well. If there is any upside, it's just retracement. It could be a decent retracement eventually, maybe even retracing this particular leg. But 130 would be probably at the moment the very max it can go before follow through to the downside, which is the 38.2 fib. So yeah, that means indeed another 1,000 pips down, as Bjorn says. Definitely, in my opinion, yes. This is exactly the confirmation I was thinking of, as I've told several times throughout the last few months. Is that, you know, if this is the break of a rising wedge of the E part of the triangle, which you can see here, A, B, C, D. No, other way around. Sorry about that. Made a mistake. A, B, C, D, E. To complete B of an A, B, C, then we're going down for C after finishing E of B. Sorry if that's repetitive for some of you, but some of you are maybe not as frequent viewers. And if you're new in here, by the way, please let me know. It's good to know if we have some newcomers. So I'm sometimes maybe I can explain it a bit more detailed otherwise. Then if this is the C, it should be impulsive. And that's why I was monitoring this daily. Right here, this looked impulsive, and then specifically how price was reacting in this part here, because otherwise, if this would have bounced, it would not have been that impulsive, and here we did get the acceleration. So this is typically looking like an impulsive wave 3 for those that like waves, but anyhow, that's a different matter again. Where the first big correction could come, that's a good question. When you look at this first wave, if you calculate 2,618%, that is at 124.20. Could be a level. It's difficult to tell, to be honest, where that big one could be. It could be all the way down here at this trend line before it bounces. 121, I think. That's not easy. It is a bit tricky. I think we'll have to wait for price action to show a bit of a bounce, probably. Well, if you consider the fact that if you put a fib on the very first A wave that we just discussed, one of the targets where C could go is the 113 level. So if we back count 113, it could go all the way down to, yeah, it's easily 120 before, and then get a bounce and then down to 113, for instance. It's difficult to say. Anywhere between 120 and 125, though, seems likely to me, because you have the psychological numbers as well. But we'll have to see. Back to the strategy, though. So that is the idea here, trying to catch a continuation of the euro-dollar downtrend with an intraday below L3 with max 125, 125.60, 125.50, 125 target for today. Let's take a look at the pivot points. Daily S2 is all the way at 125 as well. All right, so pound dollar, let's take a look. Has L3, fractals at L3, there's 2 bearish, and price is in a downtrend. It's not as fluent, as nice of a movement as the euro dollar. It's more choppier as it goes down. That's because the euro pound is moving down as well. Pound is showing more strength against the dollar than the euro, but it's the same situation here, same triangle basically going on. This purple line and this trend line right in here indicating that triangle. So break below L3 would be a break below the moving averages and the trend line and the L3 Camarilla. Same scenario here for dollar strength on the pound. Also looking good. From our perspective, it will be the same scenario. In fact, it's about the same setup. So it could be treated as a swing, smaller swing maybe as well. Let's see, Kalian is asking about 126.34. Could be. Yeah, that's a 50 fib. Could be double top. Makes sense. Price shouldn't go, normally speaking, above H3, this bottom, and the 78.6 fib. So, I mean, if specifically this bottom right in here, so if a stop loss is above those 2 blue lines, then it should be, it should be technically at the right spot. So then any short, I guess, below that zone, from this point of view, makes sense. Will it work out? We never know, but from a fib point of view, that makes sense. Let's see. It's all the same story here with the dollars basically showing upside. The dollar Swissie 2, just like the euro dollar. Dollar yen 2 is also bullish, but the problem is that we're at the 110, and therefore why choose dollar yen if it's right at the 110 round psychological number? Then if in the dollar, I'd rather trade pound or euro, or even dollar Swissie. So then I would skip this one, but it is an uptrend. It's just moving a bit more choppily. If we take a look at a blank chart without the moving averages, you might see that a bit better, because sometimes it does get clustered with moving averages, and you'll see this kind of pattern, or maybe this even, which is a pattern of a rising wedge. It might not turn out to be a rising wedge, but it's behaving like one at least. And if we connect the bottoms and top lines, it looks like one. Therefore, I would be a bit more cautious with the dollar yen. The audio is made a good break yesterday. For those that traded it, you maybe got some pips here, anywhere between 35 and maybe max 60 apparently, if you would have taken the break somewhere in here of the L3 to the downside. If you use fractals to trail stop it, you're looking at probably around 35 pips. And if you took the L5, you're probably looking at a bit more, maybe 45. That was earlier today. Now, though, the Camarillas are not so useful because we already reached the L5, which is the target. So, what now? Well, we don't know. Let's take a look at the higher time frames, because from the Camarilla point of view, the zones have already been played out. So let's take a look at the hourly then. Massive downtrend, 700 pip fall in September on the Aussie. And it is looking like, from a discretionary point of view, I just would say that it looks like a hook back after a broken trend line. And yeah, basically a short maybe at the 61.8 at 87.20, with a stop loss above the swing high at 87.60. Could be a 40 pip stop loss. And a follow through to, for instance, 86.06. Price bounced off the monthly support, by the way, here. Wasn't able to break it. That's something to be maybe cautious of, but still, technically speaking, okay, that's the only worrying part about it, but otherwise, normally speaking, it should be break, pull back, and go. But there is a big monthly support. So a monthly support like that could cause a bigger retracement. So from that point of view, maybe the Aussie is not as good as the euro dollar or even the pound at the moment. Euro is still my favorite at the moment if I compare it with pound and yen and now the Aussie. Because of the big blue line here, you probably don't see it that well. This blue line. That's a monthly bottom. All right, we'll continue with other setups soon. I just wanted to quickly show you yesterday, what we discussed yesterday was break below L3. I took the short at 126.74 after break of this trend line and a break of these bottoms here and the L3 and exited at above this fractal here, 6 pips above this fractal at 126.06 for 69 pips to the downside here. So that was a good win. I let the momentum ride out. And when I saw that, it was going to probably bounce because we making a smaller had inverted head and shoulders here, and I wanted to protect the profit by putting the stop loss above it. So locked in 69 pips. I was very happy with that short. Did anyone else take the euro dollar short by any chance? Be just curious to see if anyone did. Nothing wrong if you didn't. If you did, let me know how many pips you made or lost. I probably won. Considering the fall, if you took it to the downside at least. So that was nice. The same happened with all of these. The dollar Swiss C blasted to the upside. The dollar yen went up. I took the dollar yen too, made a small profit on that, not as much as the euro dollar. So those were good trades. I was very happy with that, and we analyzed that together yesterday, and those did work out nicely. So the dollar strength indeed happened yesterday. The one thing that didn't happen was the pound New Zealand upside, and I lost on that one. This one I lost. What can you do? We broke above. What I was waiting for was a break of this candle above the 21 band, and it did. It did have a bit of a shooting star. So I did wait for the pullback, but price didn't bounce. Price kept on moving down, and well, that sometimes happens. What can you do? Still, I always think that the pound New Zealand could be interesting. Still think that the spike up is good momentum. But definitely want to see a break above daily pivot point. Definitely want to see a break on a break of this trend line. Otherwise, yeah, it could look like a bull flag, but it's not tradable as yet, at least not to the upside. Also, it made some pips on the euro odd yesterday, and price had a swift downside here. Very good momentum. That's what I liked about it. It kind of made like this motion of a correction here, and there was a confluence of a 38.2 fib with a L3. No, yeah, L3, because price broke below the L3, hit the L4, bounced off the L4, went back to the L3, which is, can be then resistance, and that's the zone I'm looking for, right? For the L3, L4 sweet zone there. When it breaks through L3, it still has space to the L5. So when price was below the L3 and hooking back to it with the 38.2 fib, especially with the swift momentum here, very important emphasis on the swift momentum, I thought it was worth it. I quickly moved it to break even because I didn't like the euro odd in general was more of an uptrend though before that. So it was a reversal trade, so I didn't want to risk too much. but after moving into break even, this pullback I luckily was able to survive. It was really, really, really close, in fact, actually. About 3 pips here, but I was able to survive this pullback, and then I got the fall. And I made 94 pips on this one, and I took it out actually at 144.25 at this spot right here. Here. Because we didn't break the bottom for more than 6 candles, within 6 candles. So therefore, to me, as my 6 candle rule states, the chances of this bottom breaking is low. Therefore, getting a price that's close to the bottom is probably the max I'll get, which in this case turned out to be right, because after that we actually went nowhere, and the bad Aussie news sent it the other way around. I guess that was the max, almost the max. Good. So now we'll continue, but just wanted to review some of those. The euro dollar, with the analysis of that was, just quickly, folks, Kalian is asking, no problem. Yesterday, basically, well, one of the things was for sure that obviously it's a downtrend that stays the same today. No divergence, not strong divergence, at least on this 15. Pretty choppy correction here, dying out, and yeah, basically this looked like a correction. Basically, it didn't have any spunk, and we had an L3. Price was in between the L3 and H3, so a break below L3 was the starting sign of the downside, I was thinking. And the other scenario was if it would pop up maybe here to short it higher for more downside, but it never did. It started to break to the downside. So definitely the momentum, the trend, the sideways correction, the triangle here, and then the break below Camarilla. And the break below the trend lines. Kiwi, I was saying that this short right in this blue line right in here wouldn't be bad as well. I did not short it myself, by the way, this one not. But it didn't work out that bad. It didn't go as far as the euro. As you can see, an entry here went at max 70 pips. If one used the trail stop loss above the fractals, about 45. But still went for a decent bit. Is now making quite a consolidation. I wouldn't mind shorting it probably below this trend line though, because price did dip below the L3. It went into that sweet L3, L4 zone. Now it's back above it. So actually I did attempt a short because of that in this zone, but I lost about 8 pips on this one, which is because of the fact that price didn't continue. That was earlier in the Asian session, because price didn't continue as I wanted to. Right? Price hooked back to the L3, and we got the 21 below the 89, and I wanted price to bounce off this level for downside. It didn't happen though. Price started to break above it, and then I don't want to have anything to do with it. So it could still go down, but I'd rather re-enter when it does break down, because now the bulls are in control, not the bears, and that's not when I want to be in. So I would be willing to take a look again if it breaks the trend line and shows that bears are in control. At the moment, I'm not sure. It's nothing at the moment, in fact, because price is now still stuck within this triangle. This morning, I thought there was a decent chance. Good momentum, 0.1. Sideways correction, 0.2. Respect for the L3. In the sweet zone, looked good, just like the euro dollar did, but sometimes they don't always pan out. As we can see, obviously nothing does. Still, overall though, to me, more looking like a triangle within a downtrend. Obviously, the Kiwi just as strong of a downtrend against the dollar, against all the other pairs, with a big blast here to the downside, big drop, 500 pips, 2 days, still looking bearish. So I am looking for downside, not upside. If price does move up, if anything, I think it's still actually a good shorting zone. Anywhere between H4 and H5 could actually be a good discount for a bounce trade to the downside. Anything below here, breakout trade. Downside on the Kiwi. Looks pretty good, the Kiwi. Maybe the only thing is there is a weekly here too, just like the Aussie. It is at a monthly support level. Both the Aussie and the Kiwi share that same characteristic. The euro dollar doesn't have such a level in my opinion, so euro dollar still remains the same, the best one. Dollar yen, Aussie, Kiwi at key levels. Pound moving choppily. So euro is still the best. Euro dollar. But still, despite that monthly support, I still think if it breaks this triangle, it's good. Because of the monthly support, maybe being a bit more cautious with the shorts from here could be merited, could be deserved. But if some good 1 hour wick is hitting the H5, there's a decent chance I would look at that for a potential short. Dollar CAD, we talked about, I didn't take this trade, but we did talk about it and analyze it and said, well, this blue line here, because it was yesterday, we said, this is a good momentum. It's bouncing off the L4. Looks like actually it's a bounce off the support. Remember yesterday here, bounce off support. Looks like a triangle. Looks like we have heavy support here. Price is bouncing off of it, and we had a bit of momentum. So I said, well, it looks like we had the bounce, but you can still try to catch it at the blue line. Technically speaking, price did miss the blue line actually by 1.4 pip or 1.2, but you can see that indeed the thinking was, or the analysis made sense though. Impulse, bounce off, hook back halfway, and indeed we got to follow through throughout the whole day. I didn't take this one though, but the analysis looked fine. We are still in an uptrend. Same story, I guess. Same story. Why? I hope it's not boring you, but here too, pretty close to resistance. Not there totally yet. Here too, uptrend, but dollar CAD quite choppily actually. So in theory, probably above the H3. Again, a breakout, but the moving averages are bearish here. I don't know. Doesn't seem to beat the euro at the moment, but it's all about dollar strength. Let's take a look at non-dollar pairs now. Otherwise, let's just be repetitive. Euro yen. Well, continue with this downtrend. The euro broke against the yen as well. Here yesterday, could be a hook back to the broken trend line. We had that a few hours ago. Trend line NH3, maybe if you're trading the Asian session, that would have been an interesting short maybe to think about. Right at the minus 272 target. There's confluence. 4 things: a trend line, an H3, a minus 272 target, and a top. It's a lot of resistance. Plus a pretty good, if you're waiting for a reaction to it, very nice candle there actually. Now this trade, if someone took a short, didn't go anywhere yet, 13, 15 pips, but still. Definitely seems like a potential, a good potential there at that time. Well, anyhow, now, well, we're pretty far from the L3, which is basically means that the euro yen is in a range zone. The moving averages are sideways and flat, and the 21 is above the 89. I'm still waiting, basically, for things to get more aligned. Pound yen. If you look at the 1 hour chart, it's just very, very, oh, Sorry about that. Very flat, looking for price to break out. And this is the 50-minute chart, basically in a range of about a 140, 50 pip range, bouncing back and forth. I don't like those particular zones. Pound dollar, yeah, basically same as all the other dollar stories. Looking for a break below L3 and below the triangle. Euro dollar looks a bit better. We can take a look at euro pound though. Euro odd made a good upside spike due to the odd. Now moving down again. It's not an easy one at the moment. It is an uptrend, but some signals of a divergence are present. This is a good channel to the upside. Certainly is. But there is divergence between these tops. And there could be, I mean, this is maybe a potential higher low at the moment. No, sorry, lower high. It's too early to tell, to be honest. It's still an uptrend. It had a good fall yesterday. It had a good rise, now falling again. I'm still waiting on the sidelines on this one. Not all too sure at the moment. Pound odd looks a bit stronger. Pound odd falling wedge yesterday, broke the falling wedge upside, hit the target already though to the upside. So, but this could be more likely that we could see, in my opinion, a break, pull back and go. The difference with the pound odd is the fact that euro pound is moving down. We have more pound strength. And one of the difference too is if you look at the blank chart, we've had pretty good pound odd upside. We had a pound odd upside here, a retracement to the 38.2 fib, and a confluence of a minus 272 target, downside, bear flag, downside, bounce. And the bounce, if you look at the weekly chart, weekly engulfing twins at those fib confluences, and higher highs and higher lows on the weekly chart. Last week's high is broken. And let's see. Let's see. We have this trend line broken. So we have good momentum to the upside, a higher highs and higher lows. Last week's high broken. So yeah, this looks good as a potential upside continuation, but of course we don't have we always have the potential, for retracement and follow through. That could happen with the pound odd too, but maybe not this week. Therefore, although we have a bit of a slowing down on the pound odd too, of course, still I think there's a bit more chance that maybe we could get a follow through on the pound odd. So putting a fib like this, for instance, and waiting maybe for price to bounce off 50 or 61.8. I mean, even the 886, that would be great because 886 fib is basically a very tight R2R, very tight risk, would be a great bouncing spot, for instance. So, that's the pound odd side of things. Alrighty. Let's take a look, therefore, a bit more optimistic on the pound odd, the euro odd, just waiting on the sidelines for the moment and seeing how things go. Alrighty, let's take a look at the euro-yen. Euro-yen, let's see, Kalian is asking short at 139.09. 139.09. 139.09 is quite above the resistance I have in mind. It could get there though. I'm not saying it doesn't have to. It's always possible. It is a weekly pivot point, so that's a good thing. Yeah, it's possible. It would be the last kind of point of resistance. So that's the good thing in a way. So if it gets there, it would look good. I'm not 100% sure if it gets there. It depends on what the euro would do, I guess, today. And the dollar yen is at resistance. What your dollar yen will do, if dollar yen pushes through 110, we'll see more yen weakness. This could go up. If dollar yen respects 110 a bit more, this could go down and break through the daily and monthly pivot for maybe one more fall like this. So will it get that high? Not sure. If it does, it looks like a resistance point because of nice confluence of things indeed. Alrighty, folks. Any questions you might have? We still have maybe the euro New Zealand or pound New Zealand to take a look at. No, pound New Zealand already did that. In fact, any pairs that you would like to take a look at? Oh, we got a good list here. Kiwi, let's take a look again. Kiwi, same kind of story as all the other dollar pairs, as I said. Dollar strength, looking for dollar strength to continue, but the Kiwi is bouncing off of a monthly support level just like the Aussie is. Therefore, the euro looks a bit better, but it is in a downtrend. And therefore, a break below the L4 fractal here, the fractal there, the L4, the trend line, would seem like a good trend continuation. Looks like good momentum to the downside. Looks like a correction. So the dollar is looking, no problem if you got those, no problem. So it's looking like a good dollar strength continuation, but it is something that we are seeing across the board is certain levels of support or resistance. So the euro doesn't seem to have that, but it does look like good momentum and basically good correction as well. So that would be, for me, the most logical. Unless the other thing would be maybe if price retraces higher and looking for rejection signals here. So that's the overall situation, basically. Looking for rejection higher or breakout lower. I attempted the Kiwi already this morning, but unfortunately the Kiwi didn't have the ability to continue through. We had a good momentum, but didn't bounce off the L3 as I was hoping it would. Looked like momentum. Bounce off L4, I was expecting L3 to be resistance for this. Didn't have enough energy earlier this morning. One second, folks. We'll take a look now at so I hope that makes sense, and no problem if you missed any of that before. Indeed, gladly take a look again. But I think I covered now all the angles. I'm just thinking if I missed something, but basically a very strong momentum, same like all the others here, and a big fall, big widening of the gap, So that looks very bearish. Good stuff there. So that's all I guess I have to add on the Kiwi. That's the quick summary maybe. Let's see if we can take a look now at gold. Gold in a downtrend too, but it is getting a bit of a stall. It didn't manage to break the bottom like silver did. It did get pretty close. It did have a pretty big downtrend too, but it had a recently stall here going sideways. Now trying to push through the bottom though. A break of that bottom, there's a bit of space between 11, here and 1180. So not much, but could be worth still trading. I don't trade gold nowadays that much, but looks bearish and looks like it's breaking soon. Let's take a look at 15-minute chart. Here, this trend line may be below L3, for instance, could be the breakout level to think about. You are running into a 1200 support level, just like with other dollar pairs. Here again, a big support level, maybe 1200. Maybe not the best to go short. Probably also sit on the sidelines for this. 1180 also a bottom. Maybe below L4, down to L5, maybe makes more sense. 1199 to 1192, for instance. Just to give a rough indication of my thoughts there. If you have any follow-up questions, please let me know. Then we had New Zealand yen. Let's see, daily, weekly of the New Zealand yen. Let's take a look. I'll take off the moving averages then. Go to a blank chart. Weekly charts looking bearish. We have this trend line here, kind of like a rising wedge pattern in a way. That was broken and price hooked back to that and is rejecting off of that. And you can see that, of course, we had these top and bottom lines in play, that price was going sideways. Another way of looking at it, price is now dipping below that. So it looks like we're getting lower lows and lower highs on this weekly chart against the yen, although the dollar yen is moving up, the New Zealand yen certainly isn't. And last week we had engulfing twins, and we broke last week's low. In that regard, it's looking bearish. We had a decent momentum here, correction, and even more momentum here. Oh. Oopsie, deleted that chart by accident. Looks like we had a 788.6 fib, went down to the minus 272 target. Difficult to say if this is a correction or if we get followed through now for further downside. For the moment, we're bouncing back off the broken bottom, which is close to the 38.2 fib. This is not an easy one. On the hourly, it makes it a bit easier because it looks like a bear flag and price bounce off the bottom. So I would say, looking at this, break below this bear flag, considering the momentum, would not be a bad thing to look for. Probably just like the New Zealand dollar, in my opinion. If you want to trade it on a higher time frame, then I'm not too sure. Then of course we'd have to wait for some daily signal, and I'm not sure if we have it. Well, we have actually a big breakout candle here below the support, so a retracement of that breakout candle could be a reason to short maybe. But where would the stop loss be on the daily chart? It could be all the way up here. I don't know if you trade with such a big stop normally. Or you want to maybe trade, put a stop loss above that daily highs candle. which is at 86, 08, 09. So that would be another way of doing that. If one wants to trade the daily, maybe daily breakout here with a relatively tight stop loss. For the moment, it looks bearish though after these downside breaks and turnaround of events here on the Kiwi yen. Those are my 2 cents. So let me know if you have follow-up questions. Okay. But this is how I would look at it if trading it, which I probably won't do, by the way. I'll probably keep on focus on the dollar, Kiwi dollar rather. But how's it going with my Ichimoku system? Actually, I lost track of that a bit. I've been trading, focusing on the moving average strategy here and another one, and I got a bit sidetracked there, so I'm not sure at the moment. Well, folks, yeah, sometimes that happens. Looked interesting though. If anyone else has the results or has some results of backtesting, or gladly take a look at that, see how it went. But I don't know myself. I looked like a pretty simple way of trading though. That was the good advantage of that. Well, I guess that wraps it up for today. Thanks so much for joining. We'll be back tonight, and then it's going to take a look. I think at Fibs, if I remember correctly, yes, Fibonacci guide all in one. And then tomorrow we'll take a look at the Tronic Trading Lab again. And tomorrow evening we're going to take a look at new methods on using support and resistance to the max. So wish you all good trading, wish you a nice day, and hope to see you soon in the webinar. Cheers, everyone.